Today we are going to be looking at NIO stock, Golden Nugget Online Gaming stock, and the general macro economy. I'm the Max Invest YouTube channel, and remember, if you like the video, like and subscribe. And remember, none of this is financial advice, and you should always do your own research. Now, recently, the US market has been going pretty steady and staying at around the 3,800, 3,900 level. Recently, the US market popped up a significant amount, and this was due to bond yields going back down from their recent rise. This is quite expected, and I don't think bond yields and all that will rise very soon for a few specific reasons. Now, over in Australia, the RBA has doubled daily bond buying from 2 billion to 4 billion, and the RBA are also considering increasing the current $200 billion bond or quantitative easing program. Obviously, if they're buying more bonds, it's going to drive down the price of bond yields, which means less people are going to put their assets in bond yields and more in the stock market, which should help prop up the stock market for a longer period of time. The Australian government has said that they're going to continue to have an overly accommodative stance, just like the US government are doing, and this looks like it could be pretty good for the stock market in the long term. And as we can see, the Australian stock market looks relatively similar to the US stock market, where it's gone back up. So recently, everyone have been fearing bond yields increasing and that therefore rates eventually increasing. However, it doesn't look like this is going to happen in the short term, and it looks like more money and more stimulus will be printed, and this year it does look like the market could go pretty well. However, at March, a lot of people who were buying may be selling because of the capital gains tax 1 year later, and this could mean the market could come down a little bit around March like it did last March. However, I do think this year could be a good year for the stock market, given the government is artificially propping up the economy and bond yields, interest rates and all of that appear to be remaining low right now. Now, for the specific stocks, as we can see, for the past while, Golden Nugget Online Gaming has been getting beaten down. And this is because in the past month or so, a lot of the riskier investments and a lot of the newer companies in emerging markets have been getting beaten down and sold off. Golden Nugget Online Gaming was, however, very clearly oversold. It went all the way down to lows of around $14, giving it under a $1 billion market cap, which is way too low for Golden Nugget Online Gaming. They're a company that's earning over $100 million in revenue every year, and it's clearly an oversale of this stock, and it was very undervalued at that point. However, a tweet on Twitter said Golden Nugget Online Gaming may get acquired by DraftKings. This was, however, just speculation, but people were saying because of its very small market cap of under 1 billion compared to, or just over 1 billion now, compared to DraftKings market cap of 22 billion, Golden Nugget Online Gaming could get acquired. This will, of course, add a lot of stability to the company, and it's going to push up the price a lot. So as we can see, in the past couple of days, the price has run back up from 14 all the way to over 16 now, and it does look like it's going to continue going further. NIO also decided to release their earnings very recently. They released deliveries for February and the full year of 2020 earnings on March the 1st. NIO's deliveries were pretty good. They managed to deliver roughly 5,700 vehicles in February, and this was a decent number, and their Q4 deliveries were 17,353 relative to 8,224 in 2019, which is over 100% growth year over year, which is some solid numbers. However, people were expecting higher numbers, and generally not as many cars are bought in China in Chinese New Year, so I think a few people were actually slightly disappointed with this beat on sales. NIO also managed to improve their vehicle margin, which is now 12.7% for the full year of 2020, compared to negative 9.9% for the previous year, showing NIO becoming significantly more profitable, and this does look quite good for NIO. NIO did, however, miss on earnings per share, and their short-term earnings per share wasn't as great, and the deliveries didn't really blow anything out of the park. So a lot of people were disappointed with NIO's earnings. Of course, this meant the stock has been beaten down significantly. In the pre-market before earnings, it ran up all the way to $51, $52. However, the second the earnings were released, it was sold off very quickly, and now NIO is sitting in the low 40s. Obviously, NIO in the low 40s is actually starting to look like a very good price to get NIO at. Obviously, this is not financial advice, but nothing has changed fundamentally with the company off this beatdown, and it is actually looking pretty good at these prices. However, I did already buy some NIO right at the top, and I'm not sure if I will get more. However, it is tempting with no fundamental changes in the company at these prices. NIO is still on track to go well in the future. They're doing their Move to America conference on roughly March the 17th or March the 16th, and it does look like NIO are hitting all of the targets they're setting for themselves, and it looks like they will go well in the future, and I do think they will be well over a $100 billion company. As we can see, they're currently a $68 billion company, which honestly probably isn't enough for NIO. It's less than where Tesla was a couple of years ago, and obviously we know where Tesla is now. That's at $800 billion. Also, the other stock I wanted to take a look at was Jumia. Jumia recently reported solid earnings. They said 2020 wasn't going to be quite as good for their e-commerce business in Africa. However, they did have a decent year despite not expecting that much. If you don't know what Jumia is, it's an African e-commerce business, so you can think of it like the Amazon of Africa. And Jumia's gross merchandise value was $231 million, which is a slight decrease, but they did expect that due to the pandemic. And during this year, Jumia's price was significantly beaten down, however, is only just coming back up and breaking new all-time highs now. Jumia is expected to go pretty well in the future, and it is literally has no competition in Africa. Even though Africa is a different continent to deal with, it is a clear market leader in Africa, and it only has a market capitalization of 3.5 billion, which is not that big for the company. Now, the company's reported pretty solid earnings, but it's just been getting sold off and keeps going. It's down 30% now, and Jumia is back in the range where it's pretty cheap right now to get. So, as we can see, it's been sold off 32%, even more than NIO, and it does look like it's in a very nice range. They have just reported pretty decent earnings with a bit of growth, and it does look like a promising business and a promising business model. Remember, if you enjoyed the video, remember to like and subscribe, and thanks for watching.